Hey everybody, let's see. There we go. Sorry about that. Had to go to the bathroom real quick. Yeah, Mother Nature calls and you gotta answer sometimes. Do apologize for being a minute late there. 5 minutes late. Logan, channel member Rex, channel member Don, channel member Will, Sergio, Ivan, Rob, Donald, Diane, Dan, Craig, General Rush, good to see you, sir. Cliff, Swinburne, Joy, Donald, my favorite subscriber, Kimberly, in the house. Be Like Water, Frank, Ted, Mark, Ryan, Gary, Darren, Gayton, Aki, Kevin, David, good to see everybody. Pauline, welcome to the show. Welcome to April 1st. So, I think if you don't have any exposure to Tesla, I think something's about to go down. You might want to pick up a share, at least, of TSLL if you want to get a piece of it. Don't recommend going big. Just think you ought to do something to get a little piece. They're going to report their not their earnings, but their sales numbers anytime now. Could be a day, could be a two. Probably by tomorrow. So, just throwing that out there. All trading involves a substantial risk of loss, though. Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, any financial instrument or anything else. Don't buy stuff from gurus. Don't buy stuff from people like me. Don't. Like the next big tool, the next big thing, the next big trade, they're all full of crap, all right? Really. I mean, the only thing I really care about is you joining my inner circle group where you get access to everything I do. That's what I really care about. All the individual systems, they're all pieces of the big puzzle. If you don't have access to everything, you're missing out. And, it's not for everybody. But those that are in there, they tend to do pretty well. And I'm just saying, like that's, my passion, my heart is in having a core group that attacks the market together. So if you desire personal financial advice, you got to hire and consult a financial advisor. But, if you're just looking at trading, it all includes a substantial risk of loss. So don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. Don't do it. Don't trade them. Don't long them. Don't short them. Don't go long. Don't go short. You might lose money unless you have a plan. All right. Risk of loss right there. Be careful out there. Nobody cares about your money more than you do. If you don't take a vested interest in it, well, it's a problem, right? Problem for you, probably more than anybody, because nobody cares about your money more than you. Nobody cares about your financial success more than you. And if you don't care, well, that's a different problem. So coming up at 10 o'clock, we have Jolt's Jobs today. Tomorrow, got the speech about tariffs. I've kind of developed this theory that it's going to be, typically we have a buy the rumor, sell the news. Like if you've been messing around in trading very long, you've probably heard that. If you're brand new to trading, you're probably like, well, that's news to me. There's a lot of things. Like we get that kind of reaction all the time where it's buy the rumor, buy the hype, sell when it actually happens, sell the news of the event. Well, tariffs have kind of got this opposite effect going on right now, where it's like sell the rumor, and then possibly it'll be like, oh, it's not as bad as we thought. Everybody back in the pool. We buy the news. That's when you look at the stock market and where we've come down to right now. When you look at this, you can't tell me this is not sort of in line with what I just said. We kind of started typing up the tariff crap back here early February. I mean, he got in office right there in January, and we kind of hyped that everything's gonna be great, and then all this tariff talk, and is that the reason that we're down, or did we just need a correction? And we haven't really gone anywhere in the stock market since July. Look at that. You're super frustrated with the market right now? Probably a good reason. Hadn't done jack squat diddly August, September, October, November, December, January, February, March, April. That's 9 months. 3/4 of a year the stock market has done jack diddly squat nothing. So anyway, I digress. Welcome to the show. Is that the bottom? Tomorrow could be a buy. Could be a buy. I'm just throwing that out there. It's like, could be a sell the rumor, buy the news. Opposite what everybody out there is thinking. And what everybody else out there is saying. So just be prepared is Boy Scout motto. Be prepared for the twists and turns of the day. That was a heck of a reversal yesterday. Right there. Loved it. Now this could, as I warned, this could potentially be 5 down. Right there. Very tight. Very quick. So we need some sort of 5 up to suggest that this was just a weird little 3 down. Or maybe a 3 down. All right. We need some sort of reassurance that this wasn't just a, I mean, this could be, this could have been the high. This could have been a little over exuberance. We could have had the first corrective move. That could have been a corrective move because it's kind of 3. This being the last corrective move with the 5. That could be the A, the B, and the C down right there. It's entirely possible. B's are allowed to exceed the 0 point. It's very rare, or relatively rare, but this could have been the whole correction that started here. We just happened to break it a little higher and take it here. Because when you look at, you know, my talk yesterday freaked a few people out. I'm trying to maybe ease that up just a little bit. When you look at this, that looks very consistent with potentially having topped here and being a correction. And when you look at NQ, it's even more so. Even more clear right here that potentially that was the top. A, B, and that was the C right there. So it looks very clear to me that that was probably the operative path, the operative count. As a leading diagonal, very corrective. 3 waves up into a B, lower high, right there on the futures, and a C wave down. That all kind of fits. If it fits, it ships. Just kidding. So that looks reasonable to me. That possibly this was just a whole big correction since mid-December. And we might turn it and burn it. Now, there's always the question, was that the final? Or do we have one more little squiggle to go? I can't say for sure. Can't say for certain which one it might be. Never can. 100% certainty. Just looks like we're near that point. We have that big potential red flag sitting out there that's been weighing on the market for 2 months. Hopefully we get it resolved tomorrow. You can let me know your thoughts either here on the chat, in Discord, however you want to do it. And if you're like, hey, how do I even get into Discord? Links in the description. $5 get you there. Buy the market roadmap. Instructions are in the members area. How to get to Discord. All right. Everybody clear? Everybody clear on the path? So despite my bearish warnings that we could see this right here. I mean, this is very real. All right. If this is what we do, if we do that right there, very possible we do something like that. Right, this is a very real risk right now in the market. But if this was all A, B, C, and this is done, shouldn't have to worry about this. Should do a 5 up here off the lows. We should give 1, 2, 3, 4, 5, maybe up near the prior high, retrace 3 waves, back, possibly test the daily roadmap line. It'd be a wicked big move. And then we could do 5 up, Another 3 retrace that could take a while. And do the final 5 up, potentially in the 66 to 6,800 area. And then we have to worry about the bigger down. That fits with my timeline. I drew it very sloppily, but that fits more with my timeline. What I was expecting sometime in the late fall, mid to late fall, we hit this top up here and then start a bigger correction. Now, why would we do that? Because I think the effects of Doge are going to trickle through. The unintended consequences, they're going to actually start hitting home. I don't think they're hitting home that fast, like as fast as people think. So, you know, my primary working theory is that, you know, I've been talking about this since last summer, that if Trump got elected and they do Doge, that there'll be unintended consequences when you take away the heroin from the heroin addict. When you take away the extra money from the economy, there's problems. The cracks are showing. We'll see what actually shapes up. All right. Anybody, like, as usual, if you got questions, throw them in the chat. Please use complete sentences. If you do, you know, that's kind of where I'm at with it. DGS2, yeah, this is continuing to soften. It's the real market rate. Now, I think the powers that be aren't stupid, and they need this rate to go back down. I think they're jawboning and all the things in the market to try to get this rate back down, so when they refinance whatever it is, some ridiculous amount of $7 trillion they have to refinance of debt, U.S. debt this year. They don't want to refinance it at these kind of rates. They'd much prefer it to refinance at these kind of rates, right? And that's trillions of dollars of interest difference here between refinancing here and refinancing down here. So there's multiple games going on, right? Multiple games going on. How do we get the interest rate low? Kind of screwed us over here by pulling it up here, trying to control inflation. Three-wave down. And here's what concerns me, though. Run the low, run the high. We're at a 618. If this turns here, this is something we got to keep an eye on. If this turns, this can develop into an explosion higher, as I outlined. What? I put that on the chart back here, somewhere around January 2023, 2 years ago, or getting to be over 2 years ago. I drew this on the chart. Interest rates work the exact same way as everything else. This next pop, if we do a pop, put it right back up here. Retrace. Another pop. Potentially right up in here. Maybe it doesn't go this high. Maybe it doesn't. Maybe it only goes up into this range. Maybe it does that toward the end of the year and create that big down in the market. Let's think about it. Let's keep an eye on it. It's potentially cooking in the market. Interest rates work the exact same way as everything else. They're all prices. They all follow these patterns. This only being reported weekly gives us less data. You know, this always works better on more data. And this broke above a warning sign right here. This broke above the 618 yesterday. We are highly likely to go on up here. This is gasoline, wholesale gasoline. Probably come up at the 242, 245 area. Next extension, possibly even higher if it gets a little sparky. We can see this actually rally up to $3. That would be the next resistance. We may see a pullback there before it busts on through. Could be like that. I don't usually talk gasoline in the morning, but this alert hit yesterday. I outlined that over a week ago that we might see this start breaking out. Gasoline might go higher again. Something to keep an eye on. Now, last night, Rongamer was asking me possible scenarios. What if we saw a hot war in the Middle East? Shock to supply. We, even though we produce more oil than we've ever produced, we don't have the refining capacity here to refine the oil that we produce. All of our refining, virtually all of our refining capacity in the United States is built to refine Middle East oil. And we're kind of like we're almost regulated out of being able to change it over to refine United States origin oil. Blows people's mind when you think about that, but and the cost to do it, to change over the refining capability, is exorbitant. So, yet another thing that we've given up manufacturing, we've given up our ability to refine our own oil. Doesn't make sense on a high level scale, but that's the way things are. This kind of messes with my mind a little bit when I really think about it. So, checking in on the dashboard. If you've never seen this before, this is S5TW, stocks above the 20-day moving average. We are hanging out in the middle. This dip, the secondary dip here, looks maybe complete. I expect it to go up above 80 as the next move. This supports sell the rumor, buy the news. Looks like operative path. This one double dipped. We were down here at the beginning of the year. We moved up. We retraced. Kind of consolidating in here. Move up back above 80. This is stocks above the 50-day. It's like, how do you trade these? You don't. These are just indexes. This is like the dashboard. These are giant market oscillators. We tend to oscillate from the top to the bottom to the top. Just gives us an idea where we might be headed next, because it's like energy in the market, right? It's kind of like the boat. When I talk about everybody tipping the boat, when the boat's up here, it tips to the other side. Then we tip it to the other side. And basically this is the boat, essentially. I call it the market dashboard. So in medium term, also set for a rally. Longer term, stocks above their 200-day. We did make a top back here in March of 24. And we've been rolling off. There's potential that we go back below 20. But when you look at the bigger picture, we've been working on this long-term uptrend. Maybe this was a fake out. And we go make a higher high up around 90, which, the long history, the biggest market tops have all topped out in the 90s. This one right here was pretty weak sauce, where we topped out back here last year. And this is the number of S&P 500 stocks above their 200-day market participation. It's quite possible that this was just another dip on the road to get up here. And interestingly, when you look back at August, that August correction was very shallow in the number of stocks participating compared to the current correction. So, possible to go higher, but also possible to only take this back a little bit and ramp it on down. So this one doesn't really give us much to go off of. This up here could be the high like that, and we just be working on the dip. We've seen that in the past. Coming into 2020. Actually, it was in 2019. Look at right here. Did the same sort of thing, except we rolled over pretty quickly. Came right back up, and then right back down to a lower low. So we could see volatility also. We could do some sort of move where we go back up to the top and then very quickly take it down. Don't know exactly what's going to happen. It's just you can look back at the history to kind of compare prior corrections. Of course, this doesn't go back super long. Relatively new index. All right, what's shaking on S&P overnight? Let's go check it out, see where we're at. Yesterday made a nice potential low. Everything's jammed up here. Don't know what's... All right, come on. Why is nothing moving? It's weird. Can't pull more bars than that, huh? All right. On ES, which is the S&P 500 futures, why look at this? Because it trades 23 days, 23 hours a day, 6 days a week. Get the right words out. This was the first move up. This, a correction, made a higher low, even though SPX cash made a lower low yesterday. We bounced back up and found resistance at the 30-minute roadmap line. If we can crack this, starts tipping the odds, we're going to go retest this prior high and the 618 zone right around 5,900. Remember, this chart I showed you a minute ago, that 618 zone, 5,900. Now, this could go fast. Like, we could be up here fast. It could be a bounce lickety-split right up in there. We didn't make a lower low, so this, if that bounced very swiftly right up to the 618, stopped right there, that could set up the downside potential. That's the scary thing about what we did yesterday. Now look at the cash. That did make a lower low. Did make a lower low, just nominally, but still counts. So we got to watch what happens coming off these lows. Now, we are not at the 30-minute on the cash index. We're just messing with the 5-minute. If we can get through it, 15-minute, just above us, right there at 56.40. Then the 30-minute on up here, 56.60. The 1 hour on up here, where we rejected off of, 57.25-ish, 57.20-ish right now. Then the 4 hour, significantly on up here. Right now, hanging around 5,800. Then the daily, hanging right in there. We bounced off the daily too. Right there. That was probably the strongest thing we bounced off of and made a lower low. So this is kind of the operative, things I'm watching. There's the resistance levels all the way up the time frame. Everybody's like, which time frame should I watch? All of them. All right, which one's the most important? Right now, got to stay above the 5-minute. Need to go test the 15-minute. That's the small time frames right there. Do I expect us to go lower low? Not right now, but how do you know if we are going to? That low, this high that we have in place, if we break below 55.40, we're probably going on down. That's your warning level. Probably going to make a new low, 54.70. That's the short-term roadmap right there for the market. And this may retrace. It may come back down, retest that 618, or we can bounce. It all, like, these patterns are fractal in nature. That means the patterns have to show up on the 1 minute. And they actually have to show up on like a 10-second chart. See right here? Look at that. Every candle is 10 seconds. See the same freaking patterns. Isn't that wild? Same pattern show up even down in the 10 seconds. That means six candles we get every minute right there. And right now, this is a bearish bias. We're in some sort of correction on the 10-second chart. But all that adds up to the 1-minute chart. We're retesting the roadmap line. The 5-minute chart, we're just sitting there on the roadmap line. We're looking for a retest of the 15-minute. So it all adds up together. Can't have one without the other. Russell getting a big rejection. Ouch. It's continues to prove the bearishness of Russell. If this makes a lower low, it just extends the everything on down. Did not make a lower low yesterday on the futures. IWM did make a lower low. Cash index did make a lower low. So very consistent with S&P. And this, this could be a potential A, B, C off the high. Or it could be a 1, 2, and this is the 3, and we get a 4 and a 5. That's also possible. And this could be a 1, a 2. This could be the 3. If we make a 4, maintain. Whoop, that was really crooked. Use a line that doesn't go crooked. Maintain the next rally somewhere below that level. Don't overlap. This sets up the bigger potential down on Russell. Oil, testing the daily. We get above this. Next resistance right there at the downtrend. This downtrend of highs we've had intact for, gosh, a couple of years, or at least a year. Break through that. 82, 80 to 82. Next target, 90 above that. And we might go up and test the big correction at 105. Up here. There's our levels. I am long oil, long UCO. Looking for that. Looking for that. Looking for 80. Looking for that one. And looking for that one. You might know on UCO how to play it. This is a leverage ticker. Be careful. Looking for this to bust on up. Get at least up into the 32 area. And maybe potentially bust on out. Go test the 42 area. And bigger target up here in the 60s. If things get really spicy in oil. Now, if you don't want to play leverage, USO, completely fine way to play this. Right there. Yeah, that's right, Goose. I mean, that's exactly right. So, yeah, we can't actually, we have sweet crude, and all our refining capacity is on sour crude, and that's what they produce in the Middle East. So, sweet crude's actually better, but we actually sell it. That's why one reason we sell it and buy cheaper oil. We sell the high-priced sweet crude. It's good stuff. And then we buy crappy oil and refine it here in the United States. GC. Potentially looking for the top. We may rally on up to that 31.90. It's the next resistance right up there. How high can we keep pushing it? Well, if this is the wave 3, which it looks like it might be, we could, things could get a little crazy. So, be careful on that one. Bitcoin, rallying. It was green in the open. Wrong, remember what I said. Spot market is green coming to the open. We were green yesterday coming to the open. We were green yesterday, and the SPX was green. Just barely. I mean, it's not like a... We may close the SPX green. Just 1 point up can be green. So don't get too overly optimistic. All right, we're not big up. We're not big down. 6 points at this point makes the difference between red and green. I'd love to see Bitcoin hold this 618 retrace and go absolute nuts, lead the market by 2 weeks, that'd be great. It doesn't have to be 2 weeks. It could just be a few days. If we see this breaking on up, get above that prior high, this is probably going on up. The target, I'm trying not to be too crazy optimistic here. I'd love to see it. Doesn't mean it'll happen. Target right now, right up here. Next target, next move will be right here or higher. That's what I want to see for continued bullishness. If we stop right here and turn down, break back below the daily, it's game over. Like game over. That right there, if we stop right there, in this vicinity right there, turn back down, break back below the daily roadmap line, that is it for the rally. You know, we're like 85% likely that the rally in Bitcoin is done this cycle if we do that right there. It's got to be Bitcoin and Ethereum have to be together. So this is only 2 green candles in a row. And 2 green candles in a row if we close them green today. Tomorrow would be a third if we close them both green. That, you know, I'm trying not to get too far ahead of my skis here. We've got to have 3 green days in a row. Bitcoin and Ethereum together is the way this works. It usually kicks off a 2-week rally. 2 to 4 week rally. Doesn't have to. Doesn't work every single time. But more often than not, it's like 95% of the time, we've seen 3 green days in a row on both Bitcoin and Ethereum. We kick off a bigger rally that lasts several weeks. It's something to keep in mind, something to keep an eye on. So tomorrow will be the tell. Can we close it green tomorrow? I don't know. NKD continuing to flush global liquidity. Next support down here around 34. This is actually getting slightly concerning right there. Hey, Ted, morning. Joseph. Dollar still churning in this zone. We might, I kind of expect this. That's first move up, retrace, next move up. I kind of expect it to come retest the daily roadmap line on the DXY, and then we'll see what happens. And that fits with the Euro USD coming back for the roadmap line here. And checking in our good pal GME, just to kind of check in on the hype here. It could be done. Could be, but this could also be a little pop back up here before we do another flush. So nothing clear there yet either. All right, I go pull all the gainers. Things moving $2 more up in the market, in the pre-market, and put them on the list. And things moving $2 more down in the pre-market, put it on the list. This is a dumpster fire with these reverse splits over here. I wouldn't touch it. Wouldn't touch it with your money. Wouldn't touch it with my money. Think about it. Nobody cares about your money more than you. I wouldn't put you in this at all. Dangerous dumpster fire, and it makes, when a dumpster fire is #1 on the chart, that should be like the biggest caution light you've ever seen in your life. Biggest caution. Boop, 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 boop. Caution. It's a caution light. I don't even have the. Let's see. I don't even know where it would be. Probably way down here. Flags. It's in there somewhere. That was with the vehicles, but I didn't see it. Let's see. Flashing light. I think they call it. There it is right there. Yeah, it is with the vehicles. Yeah, so big caution light when that is the #1 mover on the list. Newsmax, I heard they were going public. This is an IPO. Watch for this to make a lower low. Some point, and like 95% of IPOs start out bearish There's the rare 5% exception. 95 out of 100 IPOs are going to end up making a substantial lower low. That was crazy, going from 20 to 120, 130. Now it can go even crazier before it comes back down. Highly likely to come back down. Even Facebook. We go back in the weeds. Way back at the beginning. In a land far, far, long ago, in a chart far, far away, we made the lower low, even on Facebook. It's now like a $1 trillion company. Started out just kind of. So be careful chasing Newsmax. Gate. What a weird chart. Oh, we're still back in time. Yeah, that's a Marblegate acquisition. Be careful. It's the kind of thing that looks like we're going back down. PVH. Nice little pop. Resistance up here at 90. MLGO. Dumpster fire. Dumpster fires are dominating the thing today. Tesla, as I said, watch out for this one to pop. Can't disclose all the things. I don't really want to talk about all the things I know, but I don't think Goose has a theory that Cybercat became real over here for a lot of people. And big funds were caught not having enough exposure to Tesla. So they went on a campaign to push it down. Because when it launches, they wanted to have their position. Goose and I talked about this yesterday. Rongamer kind of was like, reasonable. Did they get caught not with a not enough position and need to push this back down 50% to load up? Look at this. This wasn't participating in the retrace yesterday at all. Watch out for the boom. Sales numbers coming out tomorrow, probably. They usually report them right after the turn of the month. So watch out for global sales numbers. Sharp sales drops in Europe, but possibly they set a record sale based on all the free advertising they got in the United States with burning Teslas. See what happens. PRGS. Watch for that to take a drop. Resistance up here at the 60 area where the roadmap line is, and potential to make a lower low here. CRWD. Just chopping on the roadmap line. If we can bounce, resistance is at 400. If we find resistance there and turn down, watch for support down here around 300. If we can break through that 618 at 400, up here at 44 will be the target. GE Veranova sitting on the roadmap line. If we resistance up here at 379, 380, looking for 473. If we do that, and if we break down below the prior low, there's the target. We talked about that quite a bit yesterday. This is yesterday's list, I think. No, that's today's list. MSTR popping a little bit. If that was the retest, that was the pop, retest, hold. This can shoot it. Next resistance up here at 425. If we break through that, target 590, potentially 1,000. I'm long MSTR. NTES. NTES hanging out. Watch for, if we get the close above here, kicks off the potential to go up to 111. If we reject it, potential to come back down and test that downtrend highs once again. All right, IONX is IONQs, 2x leverage. Doesn't look very positive here. Probably needs a little more downside. Wouldn't be surprised if we dip one more time. We're under the roadmap line. Watch out for that dip right there. And Z-Lab, last gainer on the list. Watch out for this being the upside target here. Could make it up to 43, but then I would expect a correction off of there. Now we could get a fifth wave extension, but it's just not likely before we retrace. Probably somewhere in the vicinity of the wave 4, somewhere back in the 20s, before we can take the next move up. Decliners, Johnson & Johnson. I've warned about this one being in a downtrend. Fake breakout. Watch for it to continue in the down channel. FNGA. And maybe it can hold on to this 786 level. Maybe. If it does, great. Love to see the upside. 754, 800, possibly even crazier levels. GPC, genuine parts. Looks like that wants to come down to the 618 level. That big retrace. One more dip, and then we could possibly go on the bigger rip. Bigger rip potential. That low, that high. Potential 618. Measure bounce kickoff, possibly 300 up here. 3x upside. Maybe even bigger. Yeah, we'd have to go for a bigger downside though. FAS, get a little correction today. Watch for rotation into financials. This could be a way to take advantage if we get that pop up to 197, 200 area. So far, we've rejected at the 618, and we've held support at the roadmap line. If we can get the bounce, there's the target, 197, 198 area. FLUT, Flutter Entertainment, looks like we're breaking down. This may develop a bigger downside. Caution is advised. That looks like a kind of a three-wave structure up. Dangerous. If we start overlapping, this is the need to hold above line right here. If we start overlapping that, probably coming on down back into the low 100s. Oil, natural gas. This is ultra long natural gas right here, coming down. And seasonality wise, we're looking for a lower low on natural gas. Right here, probably going to retrace it. And we have resistance up here, 447, and support down here at 335. That would be what I expect. And if we get extra spicy below there, below the roadmap line, down to possibly 265. Remember, this is the low point in the year. All right, every March, April, we get a low in futures. This is the low point in demand every year. And they price this out for the next decade, almost 2 decades. December is the peak, seasonality wise, and April is the low. So this may flush on down, make a low somewhere this month before we go higher again. Be careful betting long on natural gas right now. The geopolitical environment, who knows? SPXL, working on having made a bottom. I don't know. Can't say for strong. It really depends on the SPX. This is 3x leverage on it. All the things I said in SPX apply here. We may be able to rip this higher. Lots of resistance right in there. 3x leverage just adds nitroglycerin on the fire here. So that's the last one on the list. There's, with so few things, didn't really feel comfortable throwing out a bonus trade, but I can discuss one really quickly. Yeah, pull that up really quickly. I got a meeting I got to go to. There was one that I thought might be kind of worth mentioning. See if I can find it. Yeah, PJX. Right here. Here's the high. Here's the low. We did a very quick retrace. Closed just barely above that 618 yesterday. Upside opportunity, 129. Right there. Stop, dollar below the low. So 110-ish. Upside potential. right there. 6% upside. $8. Not bad. Historically, this takes... I don't have the... That's cool. Thanks for not putting the duration on there anymore. Appreciate it. And average duration is 122 trading days. So a very long duration. This is typically a slow mover. So 122 trading days puts it way the fudge out here. That's 71. And so like 6 months. Maybe not the speed-wise the best one, but this looks like it's going to do some more volatile stuff here. This last one went pretty quick. Right there. So there you go. That's the opportunity today. Hope you have a great day. I'll see you at 5 o'clock. If you come for 30 minutes of awesome, I'll take requests for at least 30 minutes. Set your reminder, and I'll see everybody later on or just tomorrow. Come see me, same bat time, same bat channel, 9:15 tomorrow. I'll be live again, going through the list. Maybe we'll get some exciting information. Have a great day, everybody.